the beginning of the crisis, it seemed like regulators wanted to blame crypto instead of the significant rise in interest rates and the deposit outflows. Now we're seeing it as a solution to the problem, but the regulators are still reticent. Something interesting happened today, or maybe it was yesterday. Governor DeSantis basically said that he was going to allow. I don't know if he said this exactly, but the conclusion of his saying we're going to set Florida apart from the rest of the nation was this ability to touch companies that touch crypto. After all, these are cash deposits. They're fiat deposits. They're not crypto. And this can be done on a state-by-state basis. So I think you'll see Florida, like it has done in many other ways, distinguish itself from the rest of the pack.
Cathie Greifeld, my good friend and a just terrific reporter on the ETF Beats, has been talking about grayscale and the opening arguments in the case with the SEC. In that discussion, how much are you considering adding to your position around trust? How are you reading how that grayscale situation is playing out?
So it seems as though the judge is having some trouble understanding how the SEC could approve a Bitcoin futures ETF, which is swaps based and therefore has counterparty risk, but will not allow a spot Bitcoin ETF. It really makes no sense. So they'll either have to basically shut down the Bitcoin futures ETF, it seems to me, or allow a Bitcoin ETF. So I think Grayscale is doing Bitcoin a great service, and its arguments have been very sound. Well, the premise of the question is that we're an asset allocator. We are not. We invest exclusively in disruptive innovation, nothing else. What we did do was we concentrated our flagship strategy, so ARKK, and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked, down to 27, 28 names. We have a scoring system, and the scoring system is based on variables we believe are very important to innovation. And so we concentrated the portfolio. Many people in the traditional asset management world, when they go through a risk-off period, they will diversify their portfolios by moving closer to their benchmarks. What they're doing is typically selling our kinds of names. Yeah. And so that is why they're putting extreme pressure on them. We'll create losses by selling stocks, and that gives us a tax loss asset, which we have. It's over $2 billion right now, against which we can take future gains, and then concentrate towards our highest conviction names. We have a paper on our site which shows the benefits of this concentration strategy during risk off and diversification strategy during risk on.
But of course, when it's risk off, you've underperformed, and actually even on a 5-year basis. I know people will say, look, you're already looking in a long period, 5-year outlook kind of perspective, but look back from here over the last 5 years, and yes, it's been a turbulent time, it's been an interest rate hike time, but you've underperformed the S&P 500. What do you say to those that have a shorter time frame in terms of investing, those that are looking to retire in the next 5 to 10 years? Should they be with you, or do we have to be long-term equity investors that have a much longer runway to have exposure to Ark Investments?
So we're the closest thing to a venture strategy to a venture capital fund in the public equity markets. And a venture fund has a long-term investment horizon. If an investor cannot have that long-term an investment horizon, then they should allocate perhaps a small amount to our strategy, say 1 or 2%, which, by the way, from what we can tell, most advisors have us at that 1 to 3% range. Now, why would you put any if the risk was the volatility that you see on this chart? It is because our companies are going to disrupt the traditional world order. And if we're right, then the large cap benchmarks and even some of the mid cap funds are going to be disrupted.